What's your take on inflation and rates and what it's going to mean for our viewers' money?
So, Brian, great to be with you. I think inflation is definitely a newfound theme this year after last year it continuing to disappoint. Very low inflation for a prolonged period. It's come back a bit. And we are seeing that reflected in interest rates. 10-year yields going above 2.9% now. It's partly on inflation expectations and inflation. It's partly on growth expectations with all this fiscal stimulus. And maybe in a slightly darker corner of the world, it's partly worries over bond supply pushing up yields because of all that stimulus.
Yeah, and do you think that a 3% yield, assuming we get there, we're doggone close, is going to derail the stock market rally entirely?
No, not necessarily. I think if yields rise gradually, and I think, Brian, you and I have discussed before, a lot of this has to do with the pace of change, not necessarily the absolute level. If we get a gradual move in yields and it's supported by strong economic growth, then I think you can have rising yields and rising equity values. And that's what we're seeing today, certainly. I think the worry would be if we had more signs of economic weakness at the same time we have inflation, that scary stagflationary environment, higher yields then go with lower equities. I don't think we're getting that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.